Hey guys, Jason Sharon here with Home Loans Inc. I'm a local mortgage broker in Charleston, South Carolina, here to talk to you about the 3 reasons why manufactured homes are more difficult to finance. So before we get into the 3 reasons, let's talk about manufactured home versus modular home versus mobile home. A manufactured home and a mobile home are the same exact thing. Some people call it one thing, some people call it the other. Manufactured and mobile homes are the exact same thing. They're built in a factory, wheels put on them, registered with the Department of Motor Vehicles, and then towed to the location, set up on land, reassembled, if it's double wide, wheels are taken off, tongues taken off. That's a manufactured home or mobile home. A modular home is built in a factory in sections. So maybe the master suite will be one section. Maybe the living room will be one section. Maybe the kitchen and dining room will be one section. And then those are put on trucks and shipped to the location, then assembled, almost like playing Tetris or something. That's a modular home. This video does not apply to modular homes. Modular homes are treated just like a traditional stick-built home. So now you're buying a manufactured home because you found it and that's what you want. Nothing wrong with that whatsoever. Here's what you could run into trouble with. First is that transaction is going to be more costly. The closing costs are higher because you have to have an extra engineered inspection. The insurance is going to be a lot higher for a manufactured home than a traditional stick-built home because it's just a more risky piece of collateral and more likely to get damaged during a storm or a hurricane or tornado. And then the third reason why it'll be more expensive is interest rates are higher on those type of loans because they are considered a riskier product. So a lot of lenders that do them will have a higher interest rate for you buying a manufactured home versus a traditional stick-built home. The next problem that you may run into is the collateral of the home has to qualify, and there's a slew of reasons why it could possibly fail. First, that engineered inspection has to meet certain requirements. The property has to have the right tie downs, the right footers, a square foot of footers, be on a permanent foundation, tongue removed, wheels removed, has to have the HUD label plates that are missing a lot of times. There's a way to get a replacement if you need to. The other part that would make the mobile home more difficult to finance is that it has to be deregistered, detitled from the Department of Motor Vehicles and registered with the county as real property. And a lot of times that has been done whenever the person is selling it to you. So the third part of what could make it more difficult is that a lot of lenders have what's called overlays. You probably call it red tape. We in the industry call it overlays. And that's where they're more restrictive on a loan type based on their personal choices as a lending institution. So let's say their typical minimum credit score might be 580, but for a mobile home, they might not go below 640 on a mobile home. They may require additional money saved in the bank as a compensating factor, or they just may have lower debt-to-income ratio limits. So there's different red tape that many lenders implement to try to make it more difficult for those types of loans. So hopefully that helps you out. If you have any questions, reach out to one of us here at the Find My Way Home Network. We'll be happy to talk you through how a manufactured mobile home loan works.